The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
Hello and welcome to Octo Nation. My name is Charlie. I'm going to be your host for tonight. Today we are looking at the definitive agreement line for Chamath Palihapitiya. I think the easiest way to pronounce this, as far as I know, and I know I'm going to get corrected, so please do it. If you put an L after after A, Alf, is there an L in there? I tried to learn how to pronounce Chamath, because when I say Chamath, people try to correct me and say I'm doing it wrong, so I tried listening to him say his own name. It sounds like to me there's like a silent L there, or there is an L there, it's not there, it's Chamath. This is his guide for his new SPACs. I want to go over it, that way we all have a reference. This is always going to be on my website. If you're new to the channel, you can always go down to the description down below and simply click on the website down below, say today's video, and this will all be referenced there. Anytime you need to reference it, it is there for you. So he kind of kept this slightly simple for us, but regardless, I think it'll be good to take a look at his background again, the guys involved, the guys that aren't involved in some of them, and come up with a thesis on which ones to grab at, because we got three all probably happening about the same time, hour or minute. So let's dive on in. So if you don't know, Chamath is a business man, okay? He is the man for business, for digital big business stuff. The guy is awesome. He has business combination background in Virgin Galactic, the director of Slack Technologies, Inc., vice president of user growth at Facebook. That's huge for user growth at Facebook. That is massive, and is recognized as having been the major force in its launch and growth. Mr. Palihapitiya was responsible for overseeing monetization products and Facebook platform, both of which were key factors in driving the increase in Facebook's user base to more than 750 million individuals worldwide. That's a huge feat. The guy that can do that to any platform, whether it was Facebook or whoever, knows what he's doing. Not only that, he's smart. He's super smart. Prior to working for Facebook, he was a principal at the Mayfield Fund, one of the United States' oldest venture firms, before which he headed the instant messaging division at AOL. ASL, anybody? Mr. Palihapitiya graduated from the University of Waterloo, Canada, with a degree in electrical engineering, is well qualified to serve as the chairperson of our board of directors because of his extensive management history and experience in identifying, investing, and building the next generation technologies and companies. There you go. This dude is also good with people. Hard to have that combo, okay? He's all over podcasts and YouTube, and he's good with people. He's a hype person too. So I mean, if this guy puts out a tweet about something, that stock goes up. So he's a guy that you want to be hanging out with, right, and listening to. So another guy that is in all these three SPACs is Ian Osborne. He was a partner at DST Global, a family of funds focused on investing in internet companies with notable successes, including, but not limited to, Alibaba, Airbnb, Facebook, Spotify, and Twitter. Mr. Osborne was educated at the King's College London and London School of Economics. So kind of the same deal, but you've got some massive names tied to this guy too. He's been with him pretty much since the beginning of his run too. He was also with him at Facebook. Then we've got Stephen Trow. He has been the CFO since 2020, so just now. Mr. Trow is a partner and the chief financial officer of Social Capital and an affiliate of the company's sponsor. Since October 2017, is responsible for overseeing the operations of their family of funds, managing the companies. He is the CFO of IPOD IPOB, which is a current SPAC stock that is currently out. Is anyone already in that? They just announced a LOI with a company. IPOC, and then all the new ones, IPOD IPOE. And prior to joining them, he was a VP of finance for Quora. Y'all heard of them? From 2011 to 2016, so that's pretty big. He was responsible for its day-to-day finance and legal operations. He's director of finance and business operations at Facebook. Right, you get in the picture. This guy was previously held a similar role in Yahoo. Y'all heard of Yahoo? Have you heard of that? Has anyone ever been on Yahoo? Just for stocks? I don't know. Do you still use it as a search engine? How about Simon Williams? He's been a general counsel and secretary since this year. Prior to working with him, he was at Balderton Capital, a London-based venture firm focusing on backing Europe-founded technology companies, so technology. And then before that, he was an associate at the London offices of each Covington and Burling LLP and Morrison Forrester LLP. Mr. Williams is a solicitor qualified in England and Wales, having attended Nottingham Law School. Mr. Williamson holds an MA and BA from University of Nottingham. That's awesome. So, cool thing is, all these SPACs, all three of these that are coming out now, have 1/4 of a warrant. So, if you buy the units when they first launch, the units, there'll be something U, like IPODU or /U or .U, depending on who your broker is, but just put in IPOD for like the first one, IPOD, or try to spell it out if you're feeling if you're feeling like it. And you'll see that the unit comes with 1 common share when they split, and then it's also going to come with 1/4 of a warrant. So there's something that a lot of people on my channel are very aware of, but you guys might not be if you're new to the channel. There's something called warrant arbitrage, which you can buy those units and then wait for the commons and the units to come out about 52 days after the launch of the unit. And at that point, you can then split those units, so then you have your commons and units separated. And then from there, you can do what you will. You can keep the commons and the warrants forever, or you can just keep the warrants or whatever. But just look at it as this one, you're getting some warrants for free. You're not getting a lot. 1/4 of a warrant is pretty low. It's definitely not the lowest. We've seen 1/9 before, but we only try to go after that if you're only going for free warrants, if there's around a half or a third. But a fourth that's hard to try to build up a huge stack and make it make any sense. But regardless, these are kind of cool because both end up gaining, and we'll get to that a little bit later when we take a look at the charts. So the first one we're going to take a look at is Social Capital Hedosophia Holdings Corp, the fourth. This is the first one. The ticker on this is going to be IPOD, IPOD. I am very curious how Apple is not going to throw a hissy fit about this. Wouldn't that be crazy if they waited until after he merged and then filed a lawsuit? So then they go after the big piece of the pie. They're going after technology too. So how can you create, it's just a ticker, but we'll just see if he ever brands it incorrectly. This could be some problem, or it could be a huge hint. I thought about too. What if Apple is going to branch off with some new type of iPod thing, and bring that back because everyone's on iPhones? I don't know. What do you think? Anyways, first one here is got a $350 million MERS, which is a lot of money, but not in the big crazy new SPAC thing that's going on where people are trying to get like the biggest one, baddest one possible, and people are thinking that means a lot better. I personally, I'm heavy on preaching this. I don't think that's always the case. Why? Because a lot of rad cool companies are not multi-billion-dollar companies right now. A lot of the cool weird ones that we might want them to bring, like let's say electric motorcycle or something rad like that, it's not going to be a $2 billion, $5 billion company right now. It's just not. A new up-and-coming tech is probably not going to be that big either, because it's not that cool yet. I'd rather get something that's not that cool yet in the ground floor. That way we've got more ways to go up, up, up. Not only that, it is way easier for these guys to find a company, let's say, that's worth $500 million and be able to get them with this one than it is if they started out with a MERS, a big bank of, let's say, $1 billion to start. They're not going to be able to get the one for 500 because then Mr. Chamath is going to have to go back to the investors and say, I know we were planning on $1 billion, but this one's only worth 500. And they're going to be like, go find a one that's $1 billion, right? But this, you can always add more, okay? So if with this first one, he ends up finding ones that are, might be a little bit out of the budget, he can always go back to the daddies and his uncles and his friends or whatever, maybe even him, and pull out a little bit more money. Because if he goes to those guys, big dudes with money, and says, hey, we got this super rad company that's coming out with electric motorcycles, whatever, electric airplanes, but we need an extra $200 million, they'll be like, here's a blank check. Yes, I'll take it. So I'd rather start, I think 350 is honestly even a little bit high. I even like them around like 200-ish, 200 million to start, but 350, fine. I like this one. So same team as above, all of them have the above ones, but this one also has a guy by the name of Nirav Tolia. I actually don't know if that's a guy or girl. I didn't look them up. I should have, but we will see. He or she will serve as a director following the completion of this offering It's a him. Mr. Taulia has spent the last 20 years creating and leading pioneering consumer internet companies. From 2010 to 2018, he was a CEO, co-founder of Nextdoor. Y'all heard of them? Pretty smart move there. Whatever that thing is, it's like if you don't know, it's like Facebook or MySpace, but for neighbors, and you got to like prove you're a neighbor by they send you a postcard, so it's legit. You know, people on there prove that they live where they do. The world's leading private social network for neighborhoods, which has been adopted by approximately 250,000 people in the United States, United Kingdom, Germany, France, all over the world. Taulia raised over $250 million of investment for Nextdoor and grew its estimated valuation to over $1.5 billion. Before Nextdoor, Mr. Taulia was an entrepreneur in residence at Benchmark, chief OO of shopping.com, and CEO, co-founder of Opinions. Does everyone remember Opinions back in the day? He began his career at one of the early companies at Yahoo, all right. Mr. Taulia earned his Bachelor of Arts from Stanford University. Anyone ever been there? Mr. Taulia is well qualified to serve on our board of directors because of his extensive experience in creating leading pioneering consumer internet companies. So this is kind of cool. The SPAC that he just signed a LOI with is an internet company. I personally really don't like internet company plays. Why? Because most of them don't do very well, and they don't hype very well. They're not that cool, if you ask me. How many like financial internet banking plays can get on the market where people are still going to be hyping them up? I don't know, not a lot. If it's like an up and coming, maybe another Nextdoor that's coming out, fine. But I mean, are people going to get excited about that? I don't know. I personally like investing in things that you can touch. Something you can grab, like an electric motorcycle or something, or electric helicopter. Come on, man, get something rad. something goes vroom vroom, or at least has a cool speaker in it, right? I don't know. I'm hoping this one doesn't go for an internet company, unless it 10x my money, but chances are a lot of them don't. Am I missing on any? Put them down in the comments. Social Capital, the fifth. We're moving on to the next one here that they just announced. IPOE is the ticker. Team is same as above, but they don't have this dude right here, right? The Mr. Taulia, but all the other ones way above, they do. They also have, instead of him, they have Jay Parikh. I might be butchering that, but Jay will serve as a director following the completion of this offering. He has served as head of engineering at Facebook since 2014, supporting and scaling tech teams across the company. He served as vice president for infrastructure, where he led the global teams that design, develop, build, and operate the physical infrastructure and platforms, both software and hardware, necessary to power Facebook and its family of products and services, enabling the community to grow from 300 million users to 3 billion. He also served as senior vice president, engineering and operations at Ning Inc. I've never heard of that. Ning, have you guys heard of Ning? Where he oversaw product development, core infrastructure, and operations for the company's social network platform. He served as vice president engineering for Akamai Technologies. Haven't heard of them either, have you? Where he helped build one of the world's largest and most globally distributed computing platform. Served on the board of directors at Atlassian Corporation PLC. Haven't heard of that either. Bachelor's degree of mechanical engineering from Virginia Tech. I've heard of that. He was also qualified to serve on a board of directors because of his extensive experience in technology, internet companies. Again, I wish it was, maybe he had a little infrastructure background, but whatever. They could pull out some cool stuff. Maybe another Virgin Galactic. We'll get to that in a second. This one, by the way, has a way bigger MERS of $650 million. So almost 2x the size of the company they're going to be going after. Then, last but not least, we've got number 6. Ticker on this, IPOF. It's the same as the very top. Not this last guy, not the one before that, but this one has got a dude named Richard Costello. He is the ex-CEO of Twitter. Y'all heard of Twitter? Will serve as a director following the completion of this offering. Mr. Costello is a co-managing partner of O1 Advisors, a venture cap firm focusing on investing in technology companies making the transition from building a product to building a company. Okay. Mr. Costello was previously CEO of Twitter. He has been founder and chief executive officer of multiple startups, including FeedBurner, which was acquired by Google in 2007. Y'all heard of FeedBurner? He holds a Bachelor of Science, Computer Science from University of Michigan. He was well qualified to serve on our board of directors because of extensive experience with startups, following working with startup chief executive officers, executive advising on their scaling and leadership. What's the MERS on this? $1 billion. What's the total on all that? That's $2 billion. Who's the daddy? Who's the running the books here? Credit Suisse. Okay, they're hooking it up fat. You know, Mr. Chamath will say, hey man, can I get me a blank check? Like, what do you need, man? Just fill it out. And he's like, all right, $2 billion, whatever, divide it in 3, we'll figure it out later. All right, here you go, we're good. Calculate it out. They're gonna get 5.5%, which is going to give them, for being Mr. Papa Bear, $110 million. That's their cut for all this. So good for Credit Suisse. They're the ones really, you know, doesn't that make you want to be the bank? You know? Yeah, we'll loan that to you. Sign here. 110 million. So scratching the check and blinking a couple times. What is the target all these guys are going after? Innovative and agile technology companies. Innovative is great. That means, you know, they're trying to do something special, possibly have a moat around them. Maybe people can't reach in and grab them and try to copy them. And then they're agile, you know, something that's dinging around and jumping around, being precise at a technology company. You know, again, I hope they do something rad like Virgin Galactic again. You know, if it's just a bunch of ones like the last one we got, that's what I think. They're also said they're going broad, all right, and they said global reach, and then they also, of course, put like little minimums where they're like, but we can kind of do whatever we want if we decide to. You know, I read through like all the SEC and filings on all 3 of these, and I could not find anything that didn't correlate through them all, and I couldn't find any hints other than this. And then it was just a bunch of hoopla, and it repeated itself 47,000 times. So you guys are more than welcome to read through the SEC filings if you are entitled to. If you go to my site, down in the description, you can click. I made these all links on the titles, all these, and it goes right to the SEC filing. So if you want to go read up for yourself, go for it. I put little snippets in here for you to take a look. So why are we here? Is it worth it? I think so. Why? Because of this. This is all that really matters, okay? The past Chamath SPACs. Let's take a look. So, this is one that just announced. This is IPOB. Check it out. So, they launched, and this is the common share. So, this is not the unit. This is after the unit split, okay? The common share launched at about like $10.75, and you blink twice and it was at 12. Of course, puppeteers took their profit, and then the puppets started buying again. Oh, I'm sorry. I'll rephrase that. The puppets started buying up here around 12-ish, and then the puppeteers sold, and then started rebuying down here at about 11. You know, I kind of rode this channel. You had a little, you know, you actually is a perfect example of a bear flag. If you guys want to know what a bear flag is, you can wrap a burrito on the top of this and wrap another side of tortilla on the bottom of this, and it gives you a nice kind of triangle that's going to the tip. And usually what happens after that, it goes down just like this. It's a perfect example of one. There you go. And then, you know, it went all the way down to like 1065, and people were selling out like crazy. And it started to get some traction. When you can see these big spikes on these SPACs after a couple months they've been out, because usually what always happens, you get a U, big spike up, and a U comes up. This means usually some announcements going on, because I don't care what you say, insider trading happens big all day long in every stock. And this is kind of what happens. And then they announce, and then flablamo, overnight, this thing hit like 18. But then what happened? People sold off like crazy. Now this one is sitting at 1479. Again, this only took 2.5 months after this came out to market. But this is after the 52 days it was a unit, though, so keep that in mind. So technically we're like 4.5, 5 months for them, which is fast, super fast. So fast that pretty darn sure they already had this in the bucket before they released it. And I'm sure they got other ones in the bucket for the other ones too. Fantastic, great. The faster they do it, faster our money turns and flips and hopefully multiplies. I personally don't like this one. This is kind of like a low ball of real estate contract flipper play. No matter what they tell you, that is exactly what this play is. It's like a digital company where it's called Open Door, where they'll buy your house from you, you know, and they'll be like, we'll give you a competitive, great offer on your house. Call us now, fill this out, and we'll just send you a check. Great, you can be out in 30 days. It's one of those plays. No matter what, they're gonna give you lower than you could probably get. Right now is a super funky time to get into real estate. Definitely not a time I am buying at all. I'm a renter right now for a reason. happily a renter right now, thank God. It's just not where I want to be right now whatsoever. They can end up making quite a bit of money because if they're going to be getting stuff for super cheap for a long time, but I think they're going to get to a point where they're going to get tapped out, because in order to make money in real estate, not only you got to buy stuff low, but you got to resell it. Otherwise, you're stuck holding the bags of what you thought was a good deal price of 10% off is no longer a good deal anymore. So there's going to get to a point real soon where they might just stop being able to buy, you know, and it could even be happening yesterday or 2 months ago. The smart people started doing it 6 months ago. Move on. IPOC. This is another one that has not even announced yet. This came out as a pair, basically, like the triplets that are coming out now. The IPOB, this one, and then the IPOC, this one here, basically came out about the same time, just like the triplets just came out. These twins came out. But look at this. They haven't even announced on this one, and this one kind of did the same thing at first. You know, about 10:30, 10:50 came out, smacked up to 12, came back down, U'd up. But this one started hyping, though, and going up because its brother over here got something. So this one has been flying up just because the brother did. So you've got that whole synergy parallelicity that's going on, which is totally rad, you know. And anything tied to this name that's probably just going to happen. Unless he starts coming out with a bunch of crap that people don't like. We need another spaceship. That's what we want, okay? We want another spaceship, man. Or Open Doors. Speaking of spaceships, here's a spaceship. Virgin Galactic. Ticker now is SPCE. This was a SPAC. This one, you know, kind of about the same thing, but dude, once this is the problem with new IPOs and new SPACs once they merge. This is why I never hold past merger, because look at this. How rad is this target? Virgin Galactic. If you don't know anything about it, just look it up. But this thing basically tanked right when it merged. You know, tanked again, came all the way down to like $7. Are you kidding me? But then look what happened. Hail Mary, this thing went all the way up to like $43, and then March happened. Flap! Someone pulled the rug out from underneath them, smacked all the way. Any baller, any cowboys out there, or cowgirls who bought down here at $6.50 or $10 after March? Raise your hand, put it down in the comments. We just want to know and give you a little clap-a-rooney. Good for you. This thing, you know, it's done fine though. I mean, now it's consolidating around 1722. You know, once they get going on some cooler stuff, this thing could absolutely get to where it was before in the 40s. You know, but I think we might have to wait until after the next crash before that happens on this one. But regardless, you can kind of see where these kind of head. You know, people are going to be flipping these a little bit, but dude, if you ride your stop losses and you're smart, you watch it, you can make some money pretty darn easily. And remember, you've got floors on these too. You know, so you can play this a couple different ways. You can wait till the units come out, which we do not know. The dates in these SEC filings are blank. For instance, right here, the state of this prospectus is blank 2020. Okay, so it's blank. Made on or about blank 2020, again right here. So they haven't announced that yet, but you can either play this two ways. You can get the units right when they come out and try to get them like the first day. And maybe get a little bit of a run up, like 10% or something, but you're stuck with that thing for 52 days. And then once the commons and the units come out, like I said, you can split them, or you can just keep the units through that and just wait to see what happens. Or what a lot of people do is you can just wait till the commons and the warrants come out. Just wait for the warrants, because the warrants are the things that really flip. You know, you multiply your money way faster with the warrants. So if you want, you can just wait till the warrants come out. That's what a lot of people are doing nowadays anyway. Because if you do buy the units, you are tying your money up. And then you've got this problem where they only come with a quarter of a warrant. And so is it worth really holding your money in them right away? I don't know. I mean, if you haven't seen a bunch of my other videos, one I did earlier today, it's 9/19/2020 on a Saturday. Go watch the last one I did, where I've got another unit play that is due in less than 2 weeks, and then the units split, and then you get the free warrants. But that one comes with half warrant per common you buy. So you're getting 2x the amount of warrants, which is way, way better than a quarter. You're getting a half. So I don't think this is a good play if you're looking to warrant arbitrage. I think if you just want to park some money and forget about it and have trust in the place, this would probably be a darn good one to do it in, But other than that, I wouldn't look at it as a warrant arbitrage. It's just not worth tying up that amount of money to get only quarters of warrants. Just look at them as like free candy tips, okay, if you want. If you have any other plays you want me to take a look at, or any groupings of stocks or anything rad like that going on, let me know in the comments. If you're new, welcome. Please subscribe. We'd love to have you. We're all about team here. We all want to just create a big family of octopus tentacles out there, getting information to help each other out. I even taught people how to chart. If you're looking to learn how to chart, I have videos on that. Tons of good stuff. Please share this with your friends if you're so inclined to. That really helps us out too. Put it on different platforms if you're on Reddit or any of those sites. I'm not good on them. And if you could do that, that'd be great. But anyways, y'all have a good rest of Saturday night. Yeah, take care.
Did you know that we give away free silver? Simply leave a comment on the video, and as long as you're in the continental United States, you can be automatically entered to win. Please friend us on Twitter and StockTwits.